So let's look into London session. And as we look into the structure of the market on 1 hour SHA-VFS, I want to draw insight into potential market reaction. So you have seen what price did there. On this structure, it's been a structure I detailed for 3 days now on a potential retest into the zone. And we have seen how 404, 407, 411, which I earlier posted on all platforms, have reacted. After we have seen price create a RS1 and create another RS level. These are resistance become support on break of structure. RS1, RS2, RS3, breakout of three RS attempted level. 1, 2, 3 breakout came for a retest. And that is why you have SR slash RT. It becomes support, become resistance, but as well as a retest to a broken RS level, three RS broken structure on 1 hour time frame. And when price returned here, it respected the same structure again as SRRC before break of structure. What structure was broken? SR1, SR2, SR3. Break of SR level returns it what? To resistance level. So what you now have now is RT, ROS. And when price returned here, that was what gave me the impetus to tell you that sell was going to be at 3,404, 3,411. Go and check that chart. Go and check it for clarity. I put everything into perspective. And when price came here, it reacted exactly within my zone 404, 411. And you have seen market drop significantly into 3,384, guaranteeing you over 200 people on a single free idea. No penny was paid, free single idea. So what we want now is a potential break of this structure. If we break this structure, believe it or not, we will go higher. Yes, if we print the structure, we'll go higher. So, and let me look into the structure and also see what we should expect if we break out from there. And let's see what awaits us if we break out from there. Of course, it's very simple. We are going to clone the structure and place it on this roof. Yes, there could be a potential reaction at this level. There's a break and retest at this level, and the push could also get exactly at the close of this roof. This is the close of the structure, which is about 3,463. If we are working with this structure, if we are working with this current time frame alone. So you see, everything in trading is probability. And that is why we look at market on multi-dimension. You look at it on multi-dimension. You don't look at it only from one perspective. Now I'm looking at it on 1 hour. When I look at it on 4 hours, what I will get is different. There has never been any time I do any chart and I get the same result. And I keep wondering why it happens that way. If I go back on 4 hours, my selling position will be different from what I got here. So it all reminds you that trading is probability. Every time frame has a different interpretation. So trade with caution, trade with caution, trade with caution. But I know for sure that the next zone of the market will be here. So if the market returns on this floor, by virtue of 1, 2, 3 ROS level, locked on 1 hour, unlocked for a buy, 1, 2. So we have 1, 2, 3, 4. And we came back here, have confirmed it 5. This becomes a strong ascending trend line, worthy of a watch, ATL. So we are going to watch it. We are going to watch it. And the roof where this very price action completed is here. So we are using the floor to predict the roof. Remember, trading is probability. So what we should expect based on our strategy is to look at this roof as the next potential sell opportunity. It could be broken depending on the impulse in the market. That if we are to follow it, if market comes back here and react, it's still way much above this structure. It's break of this structure that aligns with our strategy. If you want to sell, sell at the break of the previous high. If you want to buy, buy at the break of the previous low. So if you are buying here, that's about 3,460, way above here, over 200 pip away from the current, the most recent high, which we enjoyed. And it doesn't make any, you might, even if price doesn't favor you here, you could have the market retrace back for you to close and come out of the trade. One thing you must learn is trade in such a way that even if you are in a bad trade, the trade can give you an opportunity to come out. A lot of times you get into a bad trade that you cannot have the heart to come out of that trade due to the significant loss it has given you. So you must enter market in a position in such a way that even if you are wrong, it gives you opportunity to come out. Yes, it gives you an opportunity to come out. And one sure way to get into a bad trade and come out is to follow this strategy. If you are buying, buy from the break of the previous low. If you are selling, sell at the break of the previous high. The market will come back to retest. If a high is broken, market will come back to retest that high. So if you are wrong by 100, 150 people, when market come back, you come out of it. You have entered a bad trade. You entered a bad relationship. That's what you entered. So you allow it to give you time. It gives you time, then you come out of it and you go and do Thanksgiving that you have succeeded. So you must be very careful on that and make sure that you put yourself in a position that you can come out. If you get yourself involved in a bad trade, you must put yourself in that position. So this is 1 hour perspective, London market, and we're going into New York where we expect extreme volatility, and it's expected that the Federal Reserve could be looking at cutting rate, and we are looking at there are possibilities that the head of Federal Reserve might be changed. We don't know, but the pressure is on him on rate cut, and he might be keen on not doing so, and he could possibly be seeing a replacement if time and the care is not taken. So we are not going to say what the United States government will do, but our duty as people trading is to watch and see what the monetary policy changes are and swing and react based on the information the Federal Open Market Committee presents. So trading is probability. Trade with caution and always know that a trader without capital, a trader without liquidity is a demo trader. It's like a hunter. A hunter gun without a bullet is a toy gun. Every hunter arms himself in his den gun, 1 or 2 bullets. He shoots on precision. He shoots on timing. He waits for a big kill. The same way as a trader. Don't trade every position. Don't trade everything you see. Allow yourself to be in a high reward ratio. You are taking a less risk with a very high reward. So your risk should be low, your reward should be high. That should be your mindset. The same way a hunter thinks. He's 1 bullet, he's waiting for a big deer. He's waiting for a big antelope. He's not going to shoot a squirrel. He's not going to shoot a rat in the wild. He's waiting for a big kill. That should be your mindset as a trader. And as you start the day on a very strong mindset. Believe in yourself. Believe firmly in yourself. Believe in your strategy. Stop this strategy prostitution, jumping from one strategy to another. It's not going to help you. If you pick one strategy, focus on that strategy, backtest that strategy. 1,000, for example, Shabby FS of I have 20,000 charts to my credit. The mastery I have is not just one day, it's as a result of constantly, consistently doing one thing, doing one single thing every day. And we are glad that today we are completely independent. So I want you to read that independent status in trading. You must be consistent and know how to manage your strategy. Every strategy is good. So do have a good day. Bye bye.